Hello everyone, I hope traders and investors alike were green today. What we're going to do in this video is try to recreate our trading room the best that we can. We got the Bollinger Bands on, the pre-market levels are on. So we didn't have a lot happening overnight pre-market. There just wasn't a lot going on. We did have CPI which come in line, but other than that, there wasn't nothing major. CPI was pretty in line, and the market seemed to like it, at least for the first half an hour of the day. So we got a nice push up in the first half an hour. So at market open, our flow started to come in very bullish in the beginning. We also had breadth raging higher, so we raged clean up to like 1700 this morning. Coming off the negatives from yesterday. So that was a huge push, very strong move in at the market open. But let's hit the play button, and we're going to be using the 9 and 20 on the 1 minute time frame, the 9, 20, and the 5 on the 5 minute time frame, the best that I can. I am not perfect. We're going to definitely get some of that screwed up. We're going to be using our MACD and our Bollinger Bands. We're going to be talking about all this with some chart patterns and some price action, exactly how we traded today. So and how we seen things, how we were able to call so much different stuff. And hopefully you can find this helpful so it can help you to start make money in the markets. So let's get started. We're on the 1 minute time frame. I do want to turn this 5 off on the 1 real quick, and then let's hit the play button. So our first candle. Initially, that first candle opened up like it wanted to dump at first, and then we started to climb up higher. So this is your 1 minute chart. We got this nice pop here. So let's go to the 5 minute time frame real quick. So what do we got? So we got a whole 5 minute candle open there. So remember, before we're just looking to take a trade, we want to see the 5 minute candle, your second 5 minute candle take out your first 5 minute candle. Now that can be either direction. A lot of people are just looking for this move bullishness, but we look for it in both directions. So if you're opening your second 5 minute candle takes out your first 5 minute candle, it's a sign of strength. It's also a sign of weakness, which is strength to the downside. Now what I did like about this first 5 minute candle so much was it had actually closed over top of your pre-market highs, and we called that out for the most part for your pre-market candle bodies. We got some wicks up there, but above your pre-market candle body there, and a nice close above, and that's what we're looking for. We're looking for candles that close above levels of resistance, and previous candles always offer levels of resistance. I know that's a lot, but so here with the 5 minute candle, we got a nice 5 minute MACD cross. If we go back to the 1 minute time frame really quickly here, see if we can do this without interrupting the play. We got the replay. We pull back, strong bullish engulfing candle, bearish Harami coming back in, bringing you back in, just an inside candle, bringing you back into the 9. You got a hammer candle coming up off the 9 on the 1 minute time frame. Now you have a nice MACD there on the 1. I want to go back to the 5 real quick, and we're going to watch this 5 minute candle. I'm going to try to keep this video as short as possible. I know everybody's got better stuff to do than to listen to me ramble on about price action. So let's catch this second 5 minute candle here, and you can see right there, you see how this candle opened up? It actually, you can see it opened up and pushed higher. So that's a sign of strength there, taking out your opening candle right there. That's a reason to take a trade. That can be, it's not a reason to take a trade. I should not have said that like that. That can be part of your decision making on taking a trade though, and that's definitely a sign of strength. Now we had the 449.83 level up there, so we knew we had room to move for a quick scalp. Now we're not looking to trade up above 449.83 until the 1 minute 9 gets above 449.83. Now you can scalp those moves, and you can maybe catch a candle or two, but you're not looking to get into a trade and hold it. I know a few of them take off running, but I promise you more of them don't. So we're not looking to take a trending type trade. The 5's on the 1 minute chart. The 5's not supposed to be on here. That green line should not be on. We're looking at the blue line. That's the 9. So we're not looking to take a trending trade above that line until that 1 minute 9 gets above this time frame. So as you can see, pushing higher here, trying, and you can see it was pushing higher, took that level out. So if you had just chased it up there, here, let's get this 5 off. If you had chased that up there, then, this can cause you, especially if you're in a short-term option, this can cause you to take an L just because it pulled back. This is why we wait on that 9 to get up there. And you can see this started to roll over. So if you would have took this trade here with a short-term option, and the way, IV coming in and out on these quick moves at open, still seeing a lot of movement there. If you took this, you would have probably got scared out when this come down and broke that 9, broke the level and broke the 9. Now we know this is August and this is slow action, so we know for a fact, and we talk about this every day, several times a day. Matter of fact, I know you guys are getting tired of hearing me say this. We're losing the 9. It's just the way the market acts. This is what we do is we pay attention to what's working in the markets. So we've been losing the 9 a lot on the 1 and coming right back into the 5 on the 5 and then pushing off the 5 on the 5. This 5 on the 5 has been super helpful. So let's go back to the 1 minute time frame. And you can see here, this come back down and was able to push back up. So your entry here would have been, you could have took an entry above this for a few follow through candles, but at that time that happened, that 9 wasn't up there. So your entry has not even set up yet. This is what you're looking for. After the pop, you don't want to chase these pops. You're looking for the pullback. You're looking for the flag. A flag is nothing more than price action pulling back into the prevailing trend. And right there, if you draw your line right across your flag right there, you get a second breakout to the upside. Now you can grab a couple candles here. Now, of course, you could have caught this breakout and stayed in down here. Don't get me wrong. But also, what do you have here? You have the H buy pattern. It's an inverted version of the H sell pattern. You can see it clearly. There's your stem, and then there's your lowercase h right there. It's clear. And price is trying to push higher. And you can see your MACD here. We talk about how the goose head. So you had this was a goose head, and then it opened up. I should have pointed this out earlier. Now this is doing it again, goose head, and trying to open up. Now that's the second time. How much more do you really expect out of that? All right, so coming back in, this is the one that I'm sorry, the 5 minute, this green line should not even be on there. We should be just paying attention to the blue line screwing up there. Let's go to the 5 minute time frame. The 5, I only watch the 5. I know where the 5 is on every time frame because I'm constantly checking them. I only have that 5 moving average, and with the 9, the 20, the 50, and the 200, I don't have the 50 and the 200 on here because it's too much. I only watch that 5 off that constantly on the 5 minute time frame. So I'm looking for pullbacks only on that 5 minute time frame, but I do know where that 5 is on all time frames at all times. I'm just checking the time frames. It's nothing, it's not a big deal, but I do know where it's at, including the daily chart has been super helpful taking that. Now you can see this huge move here, got this nice push up, and then you can see it flagging right over to your 5 minute 5 right here and looking for another trade. So that was a possible trade here. Now, knowing that 449.83 is here, you might not want to take that. Now, obviously, since we traded today, we know there's a pullback coming. Your 30-minute time frame was very interesting today. We're back down to the 1 minute time frame. I want to turn the 1 back, or the 5 back off on the 1 minute time frame. The 5 moving average is now turned back off on the 1 like it belongs to be. And we were pushing here, and the market started rage. Just provided some really good trade. This is when we come into our 451.54 area, and we started to pull back here in this area. Now I want to stop this real quick, and let's go to the 5 because there's a pattern setting up, and I don't want to miss it. So we ended up here, and we got this. On this push up, we got this strong push up, and we had this what's called an evening star that formed right there, and this confirmed the evening star by moving lower. Then it took a few candles to get over top of your 9, and let's get this 5 back on. This is when we lost your 5 on the 5 coming down to the 9 and lost that 9. This candle right here looked like it really wanted to go, but if you draw your line across the top of this flag, you never had a flag break. There was never a true reason to jump in there other than you thought it was going to go up, and that does happen, But, we're not taking trades on what we think. We're taking tactical trades. And as you can see here on this 5 minute time frame, coming up, doing this right here, this is a lower high, unable to push higher, and you get this strong bearish engulfing candle, getting ready to lose your 5 minute MACD. Let's go over to the 1 minute time frame real quick. And all these moves, this was so predictable today. While we were trading that on a 5, we had this long, you can actually draw a trend line right through there. So I got a little ahead of myself. So definitely should have had this drawn before the breakout happened. But this is how we seen it in our trading room. Was we had this broadening channel here, and you can see that those candles right there were trying to break out. So that candle actually gapped out of the channel, trying to push back in here. So let's hit play and rolled right over 9 coming down, and we're starting to move lower here. So we're seeing a nice move down, and that's what we caught. We had this strong push up, caught several flags, off the 9, off on the 1 minute time frame, and then we were able to pull back. So we put in it's more like a elongated flag. It's actually a broadening channel, but it's like a elongated flag pulling back into the prevailing trend. And when we broke out of that, we broke to the downside. I want to go to the 5 minute time frame here. And let's get the 5 on the 5 1. And of course, you can see how bearish your MACD is. And on your 5, we can see it on the 1. Now on the 5, you can see your MACD really turning over there. I want to shrink this price in just a little bit. So now that we're trying to move lower, let's get the 5 back on because we're watching the 5 on the 5. So we've lost the 9, the 5, the 20, all are moving averages on the 5 minute time frame moving over. Also rejected at our 449 level. Want to keep that in mind. I'm sorry, our 451, 54 level. Want to keep that in mind. Our levels work. Please get them on your charts. Even if you're not in our group, we're talking about these levels. Please put them on your charts. They're very helpful. They will help you. All right. So as we're moving down here, at about this time, we had started to point out that using the pre-market levels, which we do recommend, use your pre-market levels because they are important. But you could kind of see this shoulder and kind of see this head. So this is what we were looking for. When we broke up here coming down, this is exactly what we were looking for. And, because it's a head and shoulders pattern, we're looking to pull right back into this area. And we had already talked about this happening, what could be possibly happening before it happened. And that provides opportunities. And when we come in this area, of course, if we get back into this area, we're expecting to put in a shoulder when we get down here. Now, we did have this bullish, almost like a hammer candle. It's actually a little piercing line candle with a long wick on it. Head back up into your 5 minute 5, and that now is forming a bear flag. See how it handles the 5 on the 5 and rejected. So we're heading back down in this area. So at this point, it may be trying to make that head and shoulders pattern. There's a whole lot of awesomeness getting ready to happen too. Just wanted to point that out. So hanging out at this area, still holding that candle line on the 5. So there's your shoulder right there. All right, let's slow it down. So the symmetry on this is very good. A lot of people would be like, pre-market levels. A lot of people wouldn't even have that on. So turn your pre-market levels on, please. They're important. If you're going to trade intraday charts and be a day trader, please turn them levels on. And you can see why, because that is the shoulder. Look at the symmetry. There's not much. We want it to look somewhat like a bust. The head's pretty long, but the shoulders, the height's there, and the symmetry's not bad. The distance between the shoulders is not bad. The armpits come back down. So if we had a line coming through, right through there, we just broke through. Now, not only, if you didn't even see this head and shoulders pattern, you have an extremely bearish evening star. Remember, evening or morning stars, when your last candle in the pattern, your right hand candle, if that candle is the strongest candle in the pattern and closes outside of the pattern, that's a really good sign of a bearish move. Now let's look at our MACD. We got our goose head backwards. We talk about that all the time. That goose head is very helpful for us on multiple time frames. We find that on. So let's slide the price action up a little bit. We do have our 447 level down here. So the awesomeness is just now beginning. Now, normally we would draw a line across there, but it's already happened. We've already seen it coming into the 447. So how are we going to act at our 447.03 level? We're expecting some kind of reaction. We don't need a major reaction. We just need some kind of reaction to take a trade off from. Now, I also want to point out, I know you guys are tired of hearing this, that we know how head and shoulders trade. We know they're going to give us some really strong move. It's going to look like it's going to break out back to the upside before crashing back lower. So we don't get baited in on that trade. To look for the reversal trade, we need to see a really strong move off the lows. All right, so Starting to look very kind of H cell patterns here. We're still bearish, and we are on the 5-minute time frame. Coming down a test of 447.03, and so far, that candle hit it pretty good, but was able to, the buyers were able to push it back up, respecting the candle line. We're watching this range low down here at this point. We also have a pre-market low down there as well, or a pre-market wick down there. But you can see it just, it just jumped through here and looked like it was getting ready to dump, and it gave us this nice hammer candle. This hammer candle gave us a reversal. Now, we know we're trading in a head and shoulders pattern, and we talk about this all the time, every time we trade one, constantly reminding of how strong that these flags are going to be. They look like they want to break to the upside before getting trashed and slammed back down. Even your MACD's changing down here, but we know how they trade. That was a good candle to catch a nice pop on. Very nice, very nice hammer candle there, breaking back up. That trade back above that move, your 9 moving average for a pop up would have been a nice price acceleration trade. Don't let these bait you in on a head and shoulders pattern. This is what they do. Please don't let them bait you in. I personally would rather miss some of the trade to the upside. If it's going to make a real move to the upside, I'm going to be able to catch it. But when it comes to trading a head and shoulders pattern, I need to see a real move to the upside, because they do this and they will bait you in and will cost you a lot of money. These are great patterns to trade if you understand how they trade. Eventually, one of these will break up and go up, yes. But you can see right back down, come back down. So when you're on your way back down, you're automatically assuming that you're going to come back down and retest these levels. Just because price has memory, it's on its way down. Probably going to find support in this area. And you can see this candle, buyers come back in, tried to buy it back up, but the sellers come in and were like, nope. Bears are trying to take it down. Your MACD's crossing to the downside. Bollinger Bands are staying open there, staying open. Come down wicked, opening right back up, letting price move down, and we started to see a decent move down. You can see another soft push back up, evening star pattern. These are what you see: H cell patterns, evening stars, bear flags. This is the kind of action. This is how they trade. And if you understand how they trade, they offer a tremendous amount of opportunities. Just please stop trying to go long and catch the reversal trades out of them, because you're so much better off staying short. So much better off. I'd rather miss a trade to the upside, or miss part of a trade to the upside, to be able to keep hammering these short trades. They give the perfect setups as long as you understand them. So right here, once again, the 5 on the 5, retesting the 5 there, wicked back off the 9. So it still looks like it's struggling. Now I want to explain this line. This line is a gap down here. The gap, I believe the gap was at 444.80, but I was never able to recheck that. I just forgot to do it. But previous day's close was 444.96, or the previous day's low was 444.96. So we were watching that area. We were taking that area out. We were looking for the gap, but there was a bit of, well, we'll see it. We'll see it. So just shot right into the gap here. I mean, it got slammed down hard. And if we go in and look at the 1 minute time frame here, I know we haven't spent much time on the 1 minute, because, and the main reason, because I haven't spent so much time on the 1, because the pattern happened on the 5. But you can see here on the 1, you got some really nice price action. You got this move down here. So we've seen all that bearishness on the 5. All that was happening. So you got this soft push to the upside, a decent push. You could have made money there to the upside, but when it rolled over, had a nice, that was the elevator down, staircase up, elevator down, perfect example. But what do you have there? It rolled over for an H cell pattern, confirmed the H cell pattern, come back, retested the breakout area before, softly rolling back over. Even on this push here, this is called a tower top. Tower tops or tower bottoms, you just need a engulfing candle coming in, squared off price action, engulfing candle coming out. And as you can see here, we were able to come down and get into the gap, trying to give us a little morning stars pattern there. Let's just see what we get off of that. So as of now, this line needs to come down, because that gap, I actually took the whole thing off, but this is your gap now. So if we go up and push and come back down, then we're working back into that gap. This is your new, the new top of your gap right there. And bear flagging was able to take it out, not a lot of power, and that's where it starts to move right there when you start clearing your 20 as well, pushing up. So this is a level here you're looking for a breakout on because previous levels of resistance. And you can see it took it out, got slammed back, and not really surprised there. Got slammed back down, losing the 5. That's the 5 right there, but was waiting on the 9 to catch up. This is the 1 minute time frame, waiting on the 9 to catch up to push higher. Let's go back to the 5 here. So it's all basic price action. Every bit of it is basic price action. Now, we're getting ready to put in a contraction pattern here. You can see we pushed back up, tested that 447 level, and seen a rejection. The next 2 candles is staying right there. Next candle, staying right here. So this is a contraction pattern, all trading within the range of this candle. Can happen on any time frame when you find a series of candles trading within the range of one candle. So you can put a box around that. It's a simple flag. Put a box around it if you want. These trade a little differently than the simple flag, though. Actually, contraction, expansion, trend. So, and this one's actually a very good example of that. I say it's still the 5 minute time frame, holding that 5 on the 5 there, but this breaks lower in search of that 9, and then this is when it bounces back up right here to retest and then climbing higher. And it looked like it wanted to pull down, but you can see the wicks giving you signs that the market wanted to go higher. And this also gives you another H buy pattern and breaking back up to the upside. And this is where we started to fail again. But we know that the market's going to trade like this due to those head and shoulder patterns. And here, as you can see, it's working its way back down. So when we're coming back into a previous candle line, we're looking to take that line out for a breakout, and it just cleared that level. And losing the 5 minute MACD, a nice pullback here right at the end of the day. And that was the close there. So I hope that you find this video helpful and you can able to take some of this information here and put it to use and be able to make some money with it. I hope to see you in the trading room and have a great night.